So welcome to everybody. So as usual, let me spend some time today on the talking about the risk management side because a lot of noise is there, and we have seen uh, how we manage unknown risk. We have seen in the past. Let me also talk about how we manage the perceived risk also, which is the current noise in the market. So as you know, all of us we talk about that quant mutual fund is the business of risk management and returns a byproduct. The entire strategy revolves around how we manage risk, okay, including the current perceived risk. This is one of the important subject which I'm going to talk about, how we cover that part. So understanding is that how we manage risk as a house. That's the most important aspect, okay? Okay. Let me also explain you briefly whatever we can talk about ongoing noise. So we are saying that what is reality and what is narrative. Narrative you have heard in the media. Narrative you have seen a lot of biased views are there. Everybody has his own agenda and narrative about it. So we are okay with that because everybody has right to express and freedom to speak. Also, we really respect that. Okay, but we just want to give you a perspective as a we are since we are a behavior house, we generally talk about what is reality versus narrative because like how I always explain from market perspective, market in short term is driven by narratives. Okay, narratives are bought and narratives are sold, narratives are created, and we as a market intermediary, you as an investor, and many more people do play some role in creating or distributing the narrative. Okay, but we always say reading between the lines. But if you look at as a long term investment thesis, then people realize the long-term perspective was very different. 6 months later, you realize, oh, that was the narrative, the reality, what we know now. Okay. And hence, in the similar context, we also want to talk about very briefly because regulatory aspect is there. We generally don't comment on that. Given the noise which is there and a lot many hard-earned money of investors are there, we thought we'll briefly talk about it. So let's understand the topic of narrative versus reality. Okay, I always say that as a mutual fund, we generally don't comment on the media related noises there. We generally convey about market, about perspective, and about risk management and our policies. Okay. Now let's understand important thesis about quant. We always talk about we are a binary house. Okay. And we since we have more than 84 lakhs folios, a very large investor base we have. So either when we talk about binary so is in the software language, the code is either 0 or 1. Okay. Either we like it or we hate it. We will never say that we partially like it and we partially hate it. Okay. That's the reason as a house, when we talk about in a stock investment, we talk about either I like a stock or I don't like a stock. We will never say partially I pruned down or partially I've added my portfolio. That's the most of the time you have seen either stock get entered a big time, but we get exit, they get exit completely. So it's a thesis which as a house we believe because we as a quant believes in quantify everything, that anything which affects market has to be quantified, and binary is the thesis which we play about it. Okay, why I'm touching base on this thesis of binary right now, because it's very important to understand. So right now a lot of people don't like us, they hate us, which we are okay with that part. Similarly, there are much more people who like us. That's the reason I'm bringing the concept of binary thing, and that's the way we are. Okay, either we like it or you hate it. If you like it, you remain with us. If you hate it anyway, you have not participated. Okay, or weak hands moves out. What is very important from a binary perspective? What is right? What is wrong? There is not be partially right and partially wrong, because the amount of returns we have generated in last 1 year, 3 years, 5 years from 2018 when we took over Escorts, this mutual fund from Escorts House, we understand we have generated one of the finest or the best risk-adjusted return in the industry. Every category charts we lead. Okay, and obviously it means we do something right. We can't be lucky on few occasions. Yes, you can be lucky on few occasions, but we are leader in all the categories which we have operated, and we are the fastest growing asset management company. We are nearly 93,000 crores of asset, 84 lakhs of investor. So it's really showcase that lot of things what we do is right. Okay, and that's the reason it is reflected in our superior risk adjusted returns. Whether you talk about absolute returns in last 1, 3, 5 years on any time horizon look at, or you talk about risk adjusted returns, or you talk about the relative returns on any parameters. Okay, we are the far the best in the industry. In that context, it's very important You have to understand how we manage risk. That's one of the reasons, though the original thought process was to talk about perception analytics, which is a part of the predictive analysis family. But I will touch base about perceived risk also very briefly. But before getting into the perceived risk aspect, which is the linked topic and talking about market in general, I just want to talk about the approach also, and where what is the current status. Okay. Now, if you really look at the current status, because a lot of people have written about, now we have to really understand role of a regulator. Okay. Now, generally, we don't talk about, but in India, we'll say we have very vigilant regulator, and I think they have done a phenomenal job. Even that's the reason a small firm like Quant has become a very sizable player, because regulator has made mutual fund as completely trusted vehicle, irrespective some who is handling the show, irrespective who's managing the show, and irrespective about any individuals. It's about the trust in the mutual fund industry. The regulator has able to build in last many years, has really helped us. A small house from nowhere become a very meaningful house in the equity in the country. So we are very, very thankful on the regulator. When we're talking about regulator, let me touch base on few things. Okay. And you have to understand it's not confined only to the mutual fund, quant mutual fund as a house. These all rules and regulations are all governed by all the mutual fund, not only in India. Globally, certain practices are there. When you talk about global practice, including India, okay, whether you talk about, apart from you doing internal audit or process audit, SAT audit, SEBI do conduct what you call it, SEBI audit. Sometimes it happens every year, depending on the size, okay, of the opportunity. Very smaller firms get every second year or third year, or bigger firms get on a regular basis. Whether you talk about SEBI audits, whether you talk about inspection, you talk about surprise visits, okay, or any sort of data which regulator, because they have right, because we are regulated entity, they have right to ask these data points, and they are very vigilant thing. When you're talking about they are observing a lot of things. We do get live questions now as compared to last few years back. Sometimes we do get questions, whatever we have done during the day itself, whatever buying and selling happened, the evening question comes. So that's the level of vigilance the regulator is. So it's a healthy thing, and we take it in a very constructive manner. So we have to understand if any inquiry happens, okay, at our end. It also has happened in the past with the other mutual fund. If these sort of visits or inspections or all these things are part of life, and I know in last 2 years, multiple mutual funds have got something similar. And if you really look at in any of the mutual fund industry or any money management firm globally, these are the things which regular inquiries happen, regular data has been asked. In fact, we have 3 people dedicated only to give the data to the auditors, regulator on daily basis. Okay, so you can understand is a highly regulated entity, and hence investors should understand that I don't think one should really react the way vested interest is talking about. And that's the reason we thought we'll address these points. So it's very important for you to understand. And it's very important for also to know, yes, a regulator should be suspicious. That is their role. Okay, like how you have been kid, your mother used to ask, have you done something wrong? He will keep an eye on you. And that's the way the situation is. 1 minute, let me slide jump. 1 minute. Yeah, I'm back. Just one second. Let me put this side. Just 1 second. They're making my touch. So when we're talking about, yes, it's the uh, task of a regulator to be suspicious, and every suspicion is not an allegation, and all allegation must be proven before any action or guilt can be proven. So the media and some of the vested interest has already given mandates about certain things, and that's the way we have strong objection. But since they have a right to express their opinion, so we also have to talk about that part. Neither the work and quant mutual fund is as normal as been, apart from whatever regulator has asked for data point. And then you have to understand it's not only quant mutual fund. All the big mutual fund, smaller mutual fund, anybody in the mutual fund regulatory body do ask these questions, and it's our bound to duty to respond. Good part is that at least Quant Mutual Fund has been one of the most transparent outs. We provide any updates to our investor. We are very early to print our fact sheet reports. When the SEBI talked about the risk assessment, the stress test report, we are the first to come out in terms of policy, disclosure. Okay. Even our fact sheet, if you look at, is the most transparent with the first working day or sometime in the first day of the month we disclose. That level of transparency we are able to demonstrate, and we give a lot of value addition information in terms of risk adjustment matters. What matters to you as an investor is given. So that is the most important aspect you have to understand from the current context. Okay, everything remain normal, everything is fine. These are the data point, which is part of life. I have observed, because we are one of the fastest growing AMC and people are very curious. From 27 crore in 2000 September 2020, we are like 93,000 crores. Okay, and a lot of people think it's a black box house we share the world. Obviously, so anything related to when it comes to quant, the noise level is on the higher side. We are very okay with that part because it means we are doing a lot of right thing and a lot of noise can be there, whether because of jealous factor or because of any other reason. We are absolutely fine. We are completely dedicated, and I can assure you, this is one area, at least on my side also in my time, for us, analytics is our passion and business is byproduct. Okay. We don't get disturbed with any noise. And this is what I have learned in my 33 years of career in the market. Don't get disturbed with the noise. Okay. I always say you have to remove or annihilate the noise from the system. So this is the entire thesis we talk about. Let's go back, and I'll touch base some of the subject related to the current context, because on multiple forums I have talked about known risk, unknown risk, and we of late have been talking about even perceived risk. Okay, so if you talk about perceived risk aspect also, let me touch base. Okay, just 1 second. Why it's not moving? Yeah, it's fine. Okay, before we get into other things, let's a lot of people have concern on the liquidity aspect, so I'll give you some perspective. Uh, our liquidity position is pretty good, not only now, right from January 2024, beginning of 2024, we observe something has changed. We have talked about that easy phase of bull run is over. Okay, but we are still in decisive bull run. Okay, let's not make any mistake. We are in decisive bull run, but we are in difficult phase of bull run. And as a part of a strategy, we have moved our exposure from mid and small towards large cap in a big way. And that does not mean we are negative on mid and small. It's a more of a risk management perspective. Yes, we have moved from illiquid to liquid stock. That is one of the important strategy, and we have played out. And if you really look at it, it's a task which take many months. You cannot just move out from illiquid to liquid names overnight. It's a few months, and sometime, depending on the size, it can be few quarter strategy, which we have been doing irrespective of the circular which came from SEBI and irrespective of anything else. This is more of an analytic perspective we have done it. Now, if you really look at as of yesterday also, we have nearly 54% of our total assets are liquid, which when I say liquid, which is composed of either cash, talk about GSEC, so the debt instrument, and we are talking about duration instrument is a largely CPLO market, and we are talking about large cap. So if you exclude mid and small, though our mid and small portfolio are fairly liquid, but assuming you exclude, because that's the way most of the people look at, we have 54% liquidity. Is a very large, nearly 78,000 crores of liquidity we have. Okay, so a lot of noise was there, because if you really understand and appreciate that, quant is one mutual fund in most of the scheme we don't have exit load. Okay, if you look at mid and small, most of the schemes have only 15 days. Earlier it was zero also, because some of people were trading in the mutual fund scheme and we were forced to impose 15 days rule, but 15 days nothing. So if as a house we really appreciate and admire, and we give that flexibility that any investor can come and get out anytime without exit load, which means our portfolio has to be liquid. Okay, not in the current context, not in the SEBI's context when we talk about mid and small ranking or the liquidity or stress test report. It's more of a philosophy which we have been following for last 5 years. From 2018, we have said no exit load in majority of the scheme. Okay, excluding the mid and small. Okay, and even 15 days is insignificant. So which clearly means our portfolio, the way we manage our portfolio are fairly liquid. Okay. And only since a lot of people think uh, our risk management strategies are very apt based on the risk of environment, we dynamically rebalance our portfolio. And if I have to rebalance my portfolio dynamically, then obviously I should have more liquid stock in my portfolio. I cannot dynamic rebalance my portfolio, which is if it is very large illiquid aspect. So that's the first important aspect we want to talk about. And even look at the, despite the noise and narrative which we have been I've been talking about, excuse me, yeah, the net outflow in last few days is only 1398 crores. Okay, it's not very decisive as compared to the hype which we saw in the market. Thousands of crores have been redeemed, people have written. There's a redemption problem going on, liquidity crisis is there. So we are very openly addressing there is no such liquidity crisis. Okay, we have portfolios of fairly liquid. 54% is the liquidity aspect in our portfolio. And what redemption we are talking about? We are hardly talking about 1.5% of our AUM sort of thing, which we call it MUM sort of thing, money under management. So 1.5% is the only thing which has been redeemed, which is not very decisive. This sort of redemption do happen when a market correct decisively. It happened a few months back also. It happened in the month of March also. N number of times we have seen whenever market correct, this sort of redemption do come. And it's not only at quant mutual fund, it comes at the industry level. And that's the reason we have been very lucky in last many years that our net inflow are significantly higher, or our gross inflows are significantly higher than the gross outflow. But on certain occasions, when an event happens internally, externally, or market has corrected sharply, some people do get capitulated at the bottom of the cycle, or they have some genuine needs to withdraw money. We see that. So if we have reduced our AUM by 1.5%, I don't think something one should look at. Look at our gross inflows. Okay, the gross inflow remains normal, whatever we are getting. Yes, gross outflow because of this noise and narrative has increased, but on a net basis, it's not very decisive number. Okay, and we also, that's the reason we do communicate very well. I'm not a believer of communicating through media. Okay, I'm a believer of communicating directly to investor either through a monthly conference or later when even something came, we were first to inform the investors and all distributor and all stakeholder who have been dealing with us for a long period of time. Okay, now despite all these noise, our liquidity is very robust. We still have a line of 650 crore which we have never used in our life. Okay, on the equity side, still we have that thing, but it's not very materialistic. But from a regulatory disclosure perspective, this is a number which is there, and I don't think we have any challenges on that aspect also. Okay. Now let's move to the, this is the table which I'm sharing. I mean, anyway, this is the first time we're going to share our monthly recording more because a lot of people are panicking and narratives is floating around, invested interest is around to ensure that some of the investors get capitulated at the bottom of the cycle. That's the way narrative is there. That's the reason we took a special approval and we are happy to share this presentation. So I don't think one should really note anything. This is the liquidity situation as on 24th, and this is last 3 days liquidity position we are trying to say. And you can see every day it is above 43% and nearly closer to 50,000 odd crores is the number in last 3 days. Okay, so it's not very decisive change which is there. Despite that we have nearly 1400 crores of net outflow, we are still holding closer to 50,000 crores of liquid assets in our portfolio. And that is the way the portfolio constructed quant mutual fund. Is not something extraordinary we have raised. This has been our portfolio construct. And that's the reason we are also trying to show you what was the liquidity position on Friday when a lot of people started Saturday or Sunday news came out. We are giving on Monday and we are also giving on Tuesday data also. So last 3 data is just to give you the comfort how we manage money. We are very calm and very eased out. So because that's our style of money management, because we cannot dynamically rebalance if I have fairly liquid stocks in our portfolio. Okay. So if you really look at in last 3 days is the number we talked about. But if you really look at and we are very grateful to thousands and lakhs of investors and distributors who have supported us for last two and a half years to be precise. We are in the top 5 in terms of AUM gatherer. We are top 5 in terms of folio gatherer also. So these are very decisive numbers. Small cap last month, we were 60% of the incremental flow came to us. This is one of the research houses talked about last 3 months, we are 50%. Otherwise, we used to get 35, 40%. So obviously, uh, it showcased the confidence and the performance which we have delivered, because this business is all about performance, performance, and performance. Okay. One fund house with one office. Okay. Two salesperson. That is the way we have built this business, asset light model. We are manufactured, so we spend time and energy on analysis, the analytical form. So very unique case study in the industry in last 3.5 years, from 27 odd crores to 93,000 crore journey, and we are very grateful to our investors and support. And that's the reason we thought I will personally talk about. Generally, I don't talk about this subject, which is more of a regulatory link or compliances generally are allowed to talk about. So I'm taking the liberty, and since a lot of concern was raised, so we are very happy to share that part. Everything remains normal. We are committed to remain as what performance we have delivered in the past. Same commitment remains, except the noise which is there, which is the process which we have to go through. Say we ask any data, we provide, and there's a normal pros data happens. Okay, if somebody is just trying to take a hype, then God bless them. The only thing we can say that we will perform our duty, whatever we are doing. As I said, this is not a business which we do. This business is byproduct. There's a passion. I'm doing this business for 33 years. When I say business is research analytics, okay, when there's no concept of AI and ML sort of thing, we call it predictive analytics, and we have been wild for this subject about it. Okay, so again, from a very on emotional note, we are very grateful to lot many distributors who have supported. As I said, it's a binary number. We really admire type of investor support we came. Obviously, performance over the reason, and the dynamic style of money management, which really we were the first to talk about this concept in India. Though initially the response was not there from, because we thought this is a new concept, but really appreciative that retail has picked up. They understood what we deliver, and industry has seen how dynamic style money management has been a massive outlier in the industry. Okay, so our request is that we remain committed. These things are small narrative noise, okay, which is there in the market for right for small reason, small time, and it will disappear. Okay, our commitment for this journey remain as it is. We are as committed as we were. Rather, today we are more committed. That's the reason we are even explaining you, okay, what is the current situation, current output, okay, and without any concern, we are very happy to share in a very transparent manner. Okay, now let's move to the important concept. Okay, it's a coincident. This subject is very apt for the current call. Now, if you recollect, when Hindenburg episode happened in January 2023, we explained the concept of how we manage unknown risk. For us, the treatment of unknown risk is something similar. Okay, it should not happen, which is the case in the industry. We say the unknown risk is depending on the company, sector, and the owners. Okay, changes. Okay, for us, is remain the same. If a large company does the same mistake and a smaller company does, the treatment is same. Okay, or any unknown risk come from the regulatory perspective or geopolitical perspective, the treatment remain the same. It should not happen. Oh, that environment was different and this environment is different. That company was very unique. They have done historically very well, but last 2 years, fine, leave it. But any smaller companies come and they will butcher him. That's not the way we deal it. So that's the reason I explain the concept how we manage unknown risk, and I'm going to talk about in a few minutes how well we manage unknown risk. Okay, and today where we stand. Let me talk about 2 minutes about perceived risk. This is one of the very, it is somewhere between known and unknown sort of thing. Somewhere in between the perceived risk comes. Okay, these have a lot of our own proprietary knowledge we have built about perceived risk. A lot of say, okay, even sometime on inflation, on interest rates, a lot of people say the unknown risk. For us, is known risk, because with the help of predictive analytics and cycle analytics or even macro analytics, we can actually predict the interest rate movements also. Not solved perfectly, but 72% times we got it right. In 2012, I wrote about how 2000 by end of 2019 till 2033 will be a very challenging phase. How inflation will go to the roof, how commodity prices will go to the roof, agri prices will go to the roof, how inflation will come with a bang. Some 10 years back it was written, and we got majority of the stuff right. The The year is not important. We got most of the years also right. The trajectory was very important. We were 10 years back to visualize that inflation will come back with a bang. And this is what we talked about, how US inflation will go to the roof. Whatever you have seen in last few months, the trailer right now, the ugly picture is still pending. But great news for India. We are not going to be impacted. This is something we want to talk about in our perception analytics. Okay. So let's talk about perceived risk or perceived perception. I'm linking the perceived risk thesis with the perceived perception right now, because the perceived perception, people have formed opinions. Some people have passed the judgment also. Some of the media houses passed the judgment also. Some of the vested interest people haven't even concluded everything. Okay. So that's not the way the life should be. So let's talk about perceived risk. Okay. So I'm going to briefly talk about, because we have limited time today. So we will talk about individuals, how the individual subjective evaluation comes into picture. It's about your perceive, up to what extent you can perceive. So it's a data points, and it's also depends on the individual characteristics. It's also differs from the environment which you have brought. It's also depend on which country you live. It's also depend on the so many data points. How perceived risk is. It's a very, if I have to call it, subjective judgment, not of individual. It combines factors such as emotional, personal experience, and I talked about environment also. It's a combination. Let's look at the risk more from a three-dimensional perspective. One could be the likelihood, the probability of one harmed by a particular event. Okay. Secondly, talk about whether you substantively sort of think what portfolio impact could be there in terms of vulnerability. When you talk about what could be the severity of that. Okay. What extent damage can happen. Okay. Now, this is the way how mathematically we try to derive these subjective lines, and how objectively we convert into number. That is something which we talk about. Okay. Now, even you are to really look at, how one's react on the perceived risk. Okay. People tend to overreact, sometimes underreact. Most of the time, people overreact. Okay. And so is the case in market. Okay. When people give up, they just give up and get capitulated at the bottom of the cycle. When the hype gets built, virtually at the peak of the cycle, there's a massive euphoria and everybody gets sucked in. Okay. And the presentation, when we talk about market outlook, I'm going to talk about, give you example. Okay. So see some of these data points. I'm not reading my line for you. I'm just trying to give you how one react on the perceived risk. Okay. Now let's understand the known risk. Okay. Known risk refers to the something which can quantify aspect of risk. Okay. You can gauge known risk. Okay. So on data points, you can gauge that is known risk. Okay. What we are going through is the perceived risk. Somebody is perceiving about it. Okay. If this happened, what happens to my performance? If this happened, what happens to my investment? If this happened, then what happened? Okay. So these are all perceived, which has not even materialized. And more you imagine, more you get tense about it. Okay. Now let's talk about, I just want to talk about what happened if this perceived risk, which today a lot of people are writing with the 100% conviction. Oh, this has happened. They have already given a form opinion about it. Okay. Without knowing the crux of the matter. Okay. There is no allegation on mutual fund as of today also. Okay. But some people have already formed opinion. One of the gentlemen is writing so negative thing. My father is a director in the company. So and so. My father passed away 4 years back, and we have responded to him. Okay. Still he wrote. Okay. So which means a very clear vested interest is there. We talk about some of the stuff they have written, even not even verified, even checked. Okay. Not even trying to take our opinions, because somebody has decided to write something and somebody has vested interest to write certain things. People have expressed opinion. We don't have issues, but at least give the facts right. If your facts is wrong, I'm just a small example I'm giving you, like when my dad passed away and he's still writing. My dad is a director in the company. So what level of work the gentleman has done, I can be as vocal as it can be, and it hurts. Okay. When you write something like this and you are bringing my late father also into picture, this level of personal attack is going on right now. We are okay. We have seen this dirt in the past also, and we are very, very strong people. And this business is all about not to get emotional disturbed in any aspect. Okay. That's the reason we are very committed what we have to do, but it hurts sometimes. Before writing, one lady has given a sensational thing. Oh, this has happened. Nobody has spoken to us. Nobody knew about it. What is there, and some judgment has formed and some answer has already been given. Okay. And that really hurts. It reflects the urgency or some sort of biasness. Let's understand, coming back, what perceived risk doesn't materialize. Whatever the perceived risk. Okay. you're talking about huge opportunity loss. Virtually you're getting capitulated at the bottom of the cycle. Okay. Or your thought process has reached such a state where you are actually give up. Oh no, I just want to move out. And this is what happened in the market also. Last 1 year, we are hearing market is expensive, expensive. And today, where we are today, all-time high. Okay, every day is of late is making a new all-time high. So people have missed out. What happened? Who got capitulated on the next day of the election outcome? Oh, the current government has not got the majority. They give up virtually at the bottom of the cycle. And I came on the media on 6 channel that day. I said, okay, how you look at these data points when VIX was up to around 31. I said, either you say this is breaking out, or I'm saying that speaking out. As a behavior analyst, we said it's speaking out. Okay. And I got it right. We said that it will correct. This is the opportunity. I said in Hindi, do haath se rehne ka time hai. That's the way I express so aggressively. This is the time. And I said that if you regret, if you don't participate, this is God-given opportunity to participate. Okay. Similarly, if whatever fear, because we respect regulator, what people are just fearing, nothing like that is there. And hence, please don't get capitulated this unwarranted noise. Okay. Now let's talk about 2 minutes. What is the uniqueness of managing money, managing risk management? We always say we're in the business of risk management and returns a byproduct. Now, we will demonstrate very live example. I'll give you something similar episode happened. If you recollect, way back in January 2023, somewhere around 25th or 27th of January 2023, when Hindenburg report hit us. One of the corporates where we have a very large holding in some of the two cash-rich company. At that time, everybody has written down. Now the best of that is I'll be open to talk about Adani Port and Gujarat Ambuja. These are the two shares we had in the portfolio. People have butchered them big time, 40-50% down. Everybody said it's a bogus company, downgraded. Today, best of the analysts has upgraded, and their targets are 1800, 1900, 1700. Okay, at 400 rupees, people have got capitulated. At 1200, their targets are 1600. So I'm just giving you example how you should not get trapped into these narratives which comes up. Okay, now let's take example on the Hindenburg issue. Yes, we have Adani groups of company exposure and everything, but that was 6-7%, which is not very meaningful. The real dent was not. The real dent was a collateral damage happened in our PSU exposure because they collapsed significantly. Okay, 20-25% exposure. Our portfolio was in PSU. Now, 15 months later, you go back, then you realize we were 15 years ahead in that call. If I could have kept the entire Adani exposure, entire PSU exposure as it is, okay, my outperformance will be massive. Whatever outperformance we have done, which is great and extraordinary, it could be even 40-45% higher than what we have delivered. Okay, that could be the number. Okay, so let's not get into the judgmental aspect. That's the reason I say I'm a number-centric guy. We are an analytic house. Okay, we say objectivity, religion, and data is God. No scope for subjectivity. So please don't get carried away with any subjectivity or biases which is floating in the market. We only get into it, but I'm just hurt today because it's not about us. It is hurting the sentiments of investor. Hard-earned monies. Sometimes some people are taking advantage of that. Let's talk about Hindenburg episode. So how our capability through dynamic style of money management plays a role. So in January 2023, in the first quarter of 2023, by March, we were the worst performing mutual fund schemes in all the category. We were down like 6-9% underperforming. That was the underperformance. Come second quarter, July 2023, we're still in the fourth quartile. Come September 2023, when it's a risk on environment, we took a very aggressive call in September, October risk on environment, and we played that cycle very well. And now look at in January 2024, majority of the schemes were number one. Okay. Now, how from a worst performing fund coming back to number one position in almost all the categories? That is the way our dynamic style of money management works. Okay. Now, give me one example in industry how people have come back from the last position in 3 quarters. Okay. And that is something which we are very proud. It's not about we have any attitude for that aspect or arrogance aspect. We have one house who always said our VRT framework is not something extraordinary. It has been built from mistakes. Okay. Mistakes will happen in life because we are individual. Idea is not to make repeat those mistakes. That's what we have been very vocal about it. This is the way this company has built, company has evolved. Even in today's context, if any mistakes are spotted or mistakes are there or some leakages there or something has to be addressed, we will address. We will take steps. Mistakes will happen. We never said mistakes will not happen. The strength is if you don't repeat those mistakes. That is the conviction of VLRT framework which we have built. Now you can understand how one unknown risk we manage. Today, I'm taking time to talk about that's the reason is one-way communication only because I want to address a lot many people have been getting so many calls, thousands of messages, okay? And some people are writing without even realizing that they have a fiduciary responsibility of not creating panic. Whenever they have to write to do proper analysis, those analyses are not coming when biases origins are coming out without talking about it. And that's the reason I'm addressing these parts. Okay. So if you really look at how well we manage unknown risk versus known risk, and when how well we manage unknown risk, and we came out as a winner in 3 quarters. So last position to one, that is the strength of dynamic style of money management of quant. Now let's address in the today's context, fear of underperformance. A lot of people have felt such episode whenever happens or any allegations come, the focus of the management changes and fund underperformance. Okay. Adani is a very classic example when Adani episode or Hindenburg episode happened where the focus got changed. Okay. Where the PSU got, which were butchered. Today, we in at least 12 companies, we are the second largest shareholder of PSUs after Government of India, where the confidence was shaken in PSUs. Okay. Every forum we have talked about something has changed in PSU. These are untouchable names. Okay. Pharma, bottom of the cycle, untouchable. Recently, I'm talking about 6 months back or 8 months back when you talk about metals rally, untouchable, not to be touched. And whatever the touchable and most admired territory didn't work out. And that's the reason how quant performed very well. One of the largest market cap company in the banking exposure I'll give you. We were the first to exit when some unknown thing hit us. Our treatment for Adani and the largest bank was also the similar. Okay. It was, we exited. Last month, we rebuilt a $1 billion position in our portfolio and is up 20% today. So I'm just giving you example how dynamic style, how agile we are, how data driven. We don't get carried away with emotional attachment. We don't get distracted with any of the articles comes, and more you do it. And if you more and more you do, because our popularity has only increased because we have trust and support of investor because we have delivered. And that is the confidence at Quant Mutual Fund we have that our process is strong, our analytic framework is very strong, and we remain committed. It's our passion. It's not a business event. So when you bring business, then you might have short-term approaches. Since it's a passion, so just delivery comes. Now, so first important aspect is talking about is that fear of underperformance. So fear of underperformance absolutely ruled out. Okay. And I have given you Adani episode, PSU episode example, metals episode, pharma as a sector episode when people have given up, we are the winners. So I don't see any problems on that aspect. Today, one of the largest holding is up nearly 5%. Okay. By default, we are the biggest beneficiary. People have criticized us. The one company, the large market cap company, is there in small cap also? Is there in multi cap also? Is there in multi asset also? Is there in pharma fund also? Is there in our BFSI fund? Is there in a consumption fund? You name, it is there. Okay. So what is the problem? It's the base. When we take our high conviction, one of the gentlemen has talked about one company here, nobody owns, this guy owns it. What's the problem? Because we are an analytic firm. I don't think journalist has to give me comments on my analytical skill set. We have proven it, and we have been proven it for a long period of 33 years. We are doing it, and we have been rated in Asia also in the past as the best PE house. Okay, so I don't think so. We have to look at from a underperformance point of view. First way. Secondly, the fear of extraordinary redemptions. Obviously, any negative news comes, any hype get guilt. It's a very natural. Some people will get capitulated, and that's the reason I expected a lot of mature behavior from some of the media colleagues, which some people did demonstrate a lot of resilience, and they were very constructive, they were guiding, but some took a very different vicious path. Okay, and ultimately some of the retail investor outflow does happen, but which is not very meaningful. I have already explained the fear of liquidity is not there. 53% of the portfolio is so liquid, and since we have demonstrated how we are ability to manage fear of known and unknown unknowns. Both unknown fear also is a philosophy which we have demonstrated. So if as a house, we manage risk very well. Okay, I'll give you some of small perspective. Before the genesis of quant mutual fund, we used to manage prop position. Okay, as a being a CEO or the risk manager of the on the quant old previous avatar, we used to run broking facilitation desk. 10 years I ran that product. We were running our prop desk for 10 years. It was a very large prop desk in the country. We used to manage 5-7 thousand crores of turnover on daily basis. We were top five volume on the exchanges. That's the size we used to do. And I'm happy to share 10 years I ran that book under my leadership. Not 1 year we had delivered negative return. Not even 1 quarter was negative. Okay. And the Lehman time, we generated extraordinary returns. So that was the first year of quant. Okay. And we generated 18 crore rupees in 18 months, 18 days. Okay. And that level, because whole world was short walls and we were long walls, because we are analytic house, we were view was to be long. So I'm just trying to give you even the best crisis which people have lost their pants, actually we made money. So it's very important to understand known risk, unknown risk, perceived risk. As a house, we are risk management house. Okay. We don't call us as a money management in isolation. We manage risk very well. So risk is all about how we manage. Let's come back to the few minutes on the market outlook, or the main title of the presentation was also to talk about, this is what we say objective brilliant data is scored. So nearly 93,000 crores. 93 has become 92 now. It's 84 lakhs folio which we have. Okay. We always talk about predictive analytics. Okay. So predictive analytics is a very large thesis of quant as a house on quant global research. Today, I'm going to talk about one subset. Okay. I have just 15-20 minutes now. So I'll briefly talk about on the perception analytics. Okay, predictive analytics I have been talking about. Today, let's talk about perception analytics. Okay, very interesting thing. Let's talk about. Okay, now if you've been in the market, and I've always seen people do forecasts, whether it's analysts, money managers, or any individual investor, what we're talking about, what will be the next 3 years earnings, 5 years earnings. So people as an analyst community give earnings forecast. Though I agree these earnings are linked with some assumption. Based on certain assumptions, you are able to forecast. I have never seen one single analyst who says that I will work on a concept of forecasting the valuation multiples. Okay. Everybody talks about earnings multiple, whether you talk about profit growth, earnings growth, or even top line growth or EBITDA number, or any financial numbers you forecast. Okay. But when it comes to valuation multiple, in the most of the places, or this way even I used to do it, it's a balancing number. If I have to increase my target, and let's say earnings have moved by 5%, I want to give a bigger target, I will expand the valuation multiple. The P expansion will happen. So if somebody's stocks is, let's say I'm giving a P multiple of 22, now I'll make it 30. So valuation, that number is there. That's the reason we call it a balancing number. Now, criticizing something is very, very easy. What is the solution? So at Quant Mutual Fund, in last many years, we have built the concept of perception analytics. With the help, when we talk about P, we always do say perception. It's not the price, it's about perception. Now let's address perception. Can you quantify these perception? And that is the thing. Let me come back. Okay. Now, as I said, when we talk about at quant, we quantify everything. Yes, you can quantify future earnings. Can you quantify multiplier? Let's go back one step forward. What drive prices? Okay. Demand supply drive prices. What drive demand supply? Perception drive demand supply. And what drive perception? Then you can drill down. During COVID period, all pharma stocks went to the roof. Okay, because it was the perception was there. There was shortage of medicines globally. After that, there was a dullness for nearly 3 years in the pharma sector globally. Okay, what was the reason? Because perception that I should not miss out. I should not be deprived of this thing. People got into the holding mode sort of thing, and every country was ordering medicines or whatever need was thing much more than what was the genuine requirement. Okay, the perception. Now this part I will take to the next level. With the help, instead of getting into just earning number, we talk about perception as a multiplicity with the help of perception analytic, and perception has to be both absolute and relative both. We are student of theory of relative equity, right? Everything in the entire universe, everything is relative except light, and that also is a very debatable one. So when we look at absolute numbers are very important, yes, but absolute in isolation is as bizarre and as abstract it can be because it's absolute. Okay, nobody can quantify. What is important for us to look at absolute number, also look at relative is more important. So when we talk about inflection points in the market, when the perception peaks out or perception bottoms out, we see a extreme inflection point, and those are the inflection points the quant mutual fund is a buyer. Okay, on the quant mutual fund you can talk about that. So very important to understand from a perception perspective this work. Now let's me go back and talk about for a few minutes on this aspect. Okay, last, and because let me explain you something more and then I'll come to the perception aspect. Last 1 year I've been hearing best of the minds are talking about India is very expensive. Answer is yes, expensive. Market never corrects. Best of the analysts are talking about, we're giving some example. Oh, what happened in 2000, what happened in 2007 8. Okay, what happened in 2018? Market corrected 20%, 40%, 60%. All this example were given, but this time never happened because the most of the people are looking at one dimensional approach, purely looking at the valuation analytics, and pure valuation analytics in isolation does not give you answer. So let me bring the second dimension about liquidity analytics. Okay, what was the liquidity in 2000? What is the global liquidity today? Few hundred times. What was liquidity in post Lehman or Lehman, even post Lehman? Best of the central bank came together and a very concentrated effect. Okay, people pump liquidity. A lot of people remember that QE was started around that time. That was the highest liquidity. No, it's not true. Today, global liquidity is few times of the Lehman crisis liquidity. Okay, and these are then you can get into the good liquidity, bad liquidity, or how you look at the good liquidity with the efficiency or productivity side of the private sector. So very important. Yes, India good liquidity is actually increasing. So second dimension is in your favor. Now bring the third dimension, perception. That's something I was coming to. Okay. The perception. What was the perception? If you forget NASDAQ or 2000 was a NASDAQ event, leave it. Okay. It was a dot-com bubble. Leave it for a few minutes. 2007-8, post-Lehman crisis, was a global crisis. India barely managed that crisis. Okay. What was the perception at that point in time? Somehow we survived. Today's perception, what was perception in 2018? Today, 2024%, despite government does not got the majority, markets at lifetime high, everybody is celebrating. That is India moment. That is India perception. And this is one of the crux of the presentation I'm coming to. On the perception side, what is when we talk about perception? Today, if I have, let me just complete this part. So when we look at the VRT aspect, you get answer. The 2/3 weightage of perception and liquidity is in your favor. Third dimension or the first dimension valuation it is not in your favor, which means there is no signs of any euphoria. This I have been saying for a long period of time. There is no signs of euphoria in India. Why are you worried about? Now coming back to the perception aspect. Let me talk a few minutes on perception and what has changed. Why it is India movement. A lot of best of the strategies are suddenly realizing that something has changed. Okay. Now it's very important because when we look at India perception is good. When you look at obviously link perception number is coming from the macro side. The Indian macros are the best in the. On absolute basis, they are good, but on relative basis, they are extraordinary. Relative to China, relative to emerging market, relative to developed market, even relative to US. Our perception is the best right now. And hence, we believe something has changed. Don't get into this narrative that what I have seen, a lot of very, very old hand in the market talks about, I've seen 20 years, 30 years of market. This is the cycle which is speaking out, move out, never seen anything like this. Promoters are selling, FPIs are not buying. It's only retail who's participating. They've all been trapped and have been one house. As an individual also, we have been talking about this is India movement. Don't move out something which is because we are very open in saying this century belongs, this half decade belongs, this current decade belongs to us and half century belongs to us. So it's next 3 decadal opportunity. Okay. And if you want to miss out the next 3 decadal opportunity, you will not able to participate. None of your P multiple, none of the data points will give you. This larger thesis about India perception is only through a perception analytics we are able to quantify. So it is very important to understand how this perception thesis work for us. And it's very important data point that India perception is very, very unique and it can be quantified. Okay. And that's the reason I'm saying till 47, where demographic cycle peaks out. We have been saying the next book title is all about the great transition will happen by 2047. How India reemerges. Okay. Irrespective of government. Okay. Irrespective of whatever a lot of people who have worried about perceived risk, it is India movement. Something has changed and something is changing with a very different pace, irrespective of the leadership. Okay. And leadership is important, but I'm using even a bigger statement, irrespective of that, because whatever changes already happened, those are completely irreversible. And the current leadership continue, even it goes to the next level. And now it's not about which party, it's all about country specific. It's all about every chief minister is doing a great job in their respective country states. And something unique I have seen, foreigners are willing to work in India because they see a growth opportunity. A number of expats has increased significantly in this country. This is India movement. And this India movement can be only quantified with the help of a perception analytics. Okay. So this level of conviction is coming through perception. We always say, a lot of people say your portfolio is very concentrated. Yes, it's concentrated because unnecessarily too much diversified portfolio also doesn't help. Mathematically, yes, statically you can say, yeah, diversification is good, but too much diversification and mathematically proven is actually bad. Because our concentration or this comes from the conviction, and conviction comes from data analytics. So we are data analytics firm. So with the help of data analytics, one important point, we are leaving a thought process. Even you are not comfortable in the market, don't exit. You can move to the balance advantage or DAF quant we have, or you move to our multi-asset type fund, which is a relative low risk, or an absolute fund. But definitely don't exit the market for next few years perspective. We are talking about it when I say I'm 3 decades opportunity I'm talking about. So very, because in 2047 India demographic cycle peaks out. Till then the cycle remains. So very unique India centric moment. Don't neither to the narrative which is going on about us right now get capitulated, and even don't get capitulated or market is peaked out. Okay. Majority of the people, all so-called smart people in the market, actually have left out feeling. And this bull market is driven by retail. Every forum I go and talk about is a retail driven market. And don't underestimate retail. That power is very large, very meaningful. The base is, and retail is much more retail investor. It's not the same retail investor which I used to know 10 years back. So that background, I'll halt here from a perception analytic, because we talked about, I can talk for hours about perception on different asset classes, different country. But right now, my objective is all about India and the perception analytics. If I can do our perception analytics also, sometime we'll do how our perception analytics has changed a lot in last many years. Okay, how we have how not a reemerge, we have emerged from nowhere. This is the strength of perception, how perception can build, but it has to be delivered through numbers and people have to feel it. Now let's talk about few minutes on the markets point of view. Okay. Now, if you go back in October call last year onwards, lot of people, in every call we have said that people have asked this question on various media, and particularly in September, October call, I listened to October call, 21st October call. Okay, yeah, I have it. Yeah. So October call, we talked about Nifty will be at least 24,000 in by 2024. Okay, the goodness is that we are very close to that benchmark. Okay, we should talk about a bank Nifty of 54,000. We are also very close to that number. Okay, now are we astrologer? No. Are we technical analysts who can project? No. Yes, we are analytics. More from a behavior perspective, we quantify some of these data points and say minimum 24,000 in 2024. And that level of bullishness was there in the month of October, and people have given up completely. Okay. And we talked about risk on rally and how beautifully risk on rally. And actually, risk on rally has also played a very important and vital role about what do you call it in terms of building this current situation where we are right now. I'm extremely confident India remain, something has changed for India for long-term perspective. Even the FPIs, okay, whenever China peaks out in the, let's say, second half or so 2024, I think they will come back with a vengeance. They will come back. India inclusion of the currency data on the rupee and the various debt market data I'll talk about will strengthen the rupee also. We have talked about in 2019 in our book that rupee can become 87 or 89, some number we have talked about by 2023. We have nearly achieved that. Now, in the next book, we are talking about rupee will appreciating. Okay. Our target for rupee is 55, 57 by 2028, 29. So that's the bullishness. You have to recalculate and reverse calculate what we call it market implied analytics. If I'm giving you one data point on this call, because some of the people are so nervous. So I thought, let me cheer them and saying that if rupee becomes appreciate significantly, just imagine what is the Nifty level. Okay. Whether it's 29,000, whether it's 30,000, I don't want to speculate, but I can tell you the trajectory is this. And rupee, it gives you first perspective how the country economy is. And we are not talking about what China did. Okay. They used their currency to depreciate as a weapon, they used it. And that's not the way normal economics we have been taught. So these all sort of mimic can work for a shorter period of time. We have never thought about negative interest rate, but we saw in our real life. We never saw crude price will be negative. You have to pay. Okay, to somebody will pay you to lift the crude. That is something which we have never seen. So those abnormalities you have to remove in mind. And this is a very important aspect. We're talking about what do you call it from India perception. Rupee is something is supplementing. Look at even we launch our commodities fund at right time. I said it's a commodity from a leverage economy to real economy. So these are some of the thesis of the next book we are talking about. How it will change the real, how the real economy will, how the spirituality will actually come back. Okay, very interesting subject we have talked about based on cycle analytics. How world will transit, and that's the way we talk about the great transition will happen. Okay, now if you're talking about very constructive on global market on the equity market in India, our worry is not India. Our worry is global market. Some amount of complacency we are seeing in the US market. Okay, we are definitely not negative on the US market, but we are saying early signs of complacency right now. Maybe appropriate time we do look into it, whether it's showing us something to worry about it. As of no, but very clear, India, we remain constructive. And what is very important is not about just one target of Nifty. How we play this game. This is a mind game we play through sector rotation and stock rotation. That is something which we are very good at. And people call the churn. No, it's a risk management tool. Okay. From that perspective, we remain constructive on the PSU as a themes. We remain constructive on the commodities as a larger theme. We added our private sector exposure significantly, pruned down public sector exposure last one, completely exited. We added private sector bank from a very near-term perspective. We remain constructive. We're equally constructive on the infra space. We're equally constructive on the pharma as a basket. Okay. And what is very important for us to understand that larger infra theme, we are not at all constructive on the within engineering, what we call capital goods. We think they are very expensive. They are all trading in the most admired territory. So all the sector and the stocks, because after such a massive bull run, you don't expect them, they will remain in a massive neglected zone. Even anything we start trading in the neglected, why we bought some of these banks, private sector bank, which were never them, because they hit not I'll say extreme neglected zone, but they came to fairly neglected zone. That was the opportunity for us to participate. So broadly constructive on India, extraordinary bullish on India from medium and long-term perspective. India remains buy on dip, and as a house who specialize in sector rotation, stock rotation, that is the way go forward. Irrespective of the narrative and irrespective of the noise, we remain committed to deliver our returns. Okay, and same process part will continue. So I will halt here because I have to leave at 5:10. I have something. Okay, I will stop it. Anupam, if you can just take it forward from here. Okay. And I really appreciate the only point which I want to again specify, the larger interest, please don't get capitulated. Okay. Thank you very much. And for patience hearing, we are happy to share the report with this, the recording of this presentation. Thank you very much. All the best to you guys.